I just read a blog article or news article that Amazon is struggling to keep their microphones in stock. They're sold out, and there's a long delivery date because everyone's a podcaster now. It's that easy.
Yes.
So we are live.
Okay.
With Renu Ann Joseph, even though that's not on your name. Luminant Analytics. Why don't you spend a couple minutes and give us an elevator pitch? Who are you? Why should we care?
Excellent. So Luminant Analytics helps insurers price and select risks better with external data. Why should you care? An insurer should care because in one line of business, the industry has got it completely wrong because they missed looking at external data. And that line of business is commercial auto, where there were certain structural changes in the industry which could have been captured, which was captured by data, but the industry missed it, mispriced it, and is still in dire straits. We help insurers convert those external data into actionable insights via data and models. And that's a value proposition.
Nice. Where'd the idea come from?
So two things. One is partly my background. I'm an economist, and I've spent my entire career looking at data with a very keen focus on making it useful to the business. And the second is my most recent job, where I was part of a niche research team in a fairly large reinsurance company, where the focus was using external data to price better. So it was just after the previous role, I found the shortfalls and I rolled into a new role, starting up the company to fill in those shortfalls that I felt was there in the industry.
Yeah. So for those that are listening or watching that don't understand commercial auto, can you split the world in two if you can, and talk about before Luminant and after Luminant, how were things priced and how are you doing it now?
Okay, so the most important difference is that Luminant will offer a commercial insurer a benchmark for the market. So let's look at a pre-Luminant world. A commercial auto insurer, someone who writes trucks, looks at their own set of data and prices of policies. And that's because that's how they've done it for the past 10, 20 years or even longer.
So what sort of data? Can you explain how, for the layperson that may not understand, what is the data that they actually have?
Yes, so they have the data on the truck, some features of the vehicle size, where it operates, who operates it, and some underlying feature of the industry that owns the trucks. That's the historical claims data. And then once there is an accident, the insurer gets details of the accident, right? Who was involved in the accident? What was the payout? How long did it take? What was the cause of the accident? Where did it happen? So that's an insurer's world, a policy that they send out and a claim that they get. And when they price it, what they have to remember is that every insurer, so you can think about an insurer as a consumer. I go to Amazon or to Target and buy a little basket of goods. That basket of goods includes my preferences, what I like to eat, when I like to eat. An insurer is kind of the same. The insurer's preferences is their risk appetite. So it's what kind of trucks do you want to insure? Do you want to insure the really big trucks that go interstate, or do you want to just do the short distance ones? So the risk, however, insurers think that preference is constant, right? Now, when does it not become constant? When do you as a consumer not know that your preference is not constant? When you go into Target, for example, and you see more goods, right? Then you know that your basket of goods that you could kind of afford or want has increased. That's a context that you get only when you see the external world. So
that applies to the commercial entity as well.
Absolutely.
Right? So it can't remain constant for the insurer because it doesn't remain constant for the business that they're insuring. They're constantly evolving as well.
Exactly. So what insurers have been doing have been pricing according to their own risk preferences, because that's what they could capture with their data. But the fact of the matter is that the underlying market, social, economic, demographic changes have changed a lot. And a really great example is, you think about a truck driver. 25, 30 years ago, it was a very well-paying profession and they had good hours. Over the past 25 years, that's declined. The truck driver is more stressed, and because of, for example, changes in food, even you could say more obese. There are a lot of factors that has changed the quality of a truck driver. An insurer will see this, because if you have, let's say there is not a good truck driver driving a 25,000 pound tractor trailer, if there's an accident, the responses are going to be less perfect. That insurer gets the consequence when there is a loss. And what we say is that the changing nature of the roads, of the truck driver's behavior, safety, it's all available in different data sources. You need to be creative enough to do two things. One is to go look at the different data sources that is outside and think about, okay, there are 20 different data sources. Which are the 10 ones that capture that change in behavior well? And the second thing is, how do we integrate that into our current pricing models? And in commercial auto, insurers are struggling with both, which is, how do we filter the signal from the noise when it comes to external data? And second, how do we integrate, say, dynamic pricing or information about behavior on a minute-by-minute basis into relatively static pricing? So these are the two challenges that an insurer sees or has been seeing for a long period of time. And what we try to do is, we want to help an actuary or a product manager or an underwriter. We want to help them do their jobs better, because Luminant's competitive advantage is our knowledge about external data and how we can bring in more different modeling techniques, more or creative ways when there is not enough data. That's our strength. So an insurer should use us to help enable their current professionals to do their job better.
So I know from personal lines, I'm aware of companies that are beginning to, plug in devices that keep track of speed, location, braking speed, acceleration, a lot of those factors. I assume that's in commercial trucking as well. And what other types of external data may exist that could enrich the underwriting process?
So yes, the telematics data or the GPS data is available for commercial fleets, just like you have in personal auto. But my assessment is that it has not fully flown through the pricing process, because the telematics provider usually generates a scorecard on the basis of certain parametrics, and then gives it to the insurer. Then how it is used is kind of lost in translation. So that's one thing. The second thing is, telematics use is not as wide as it is in the US as, say, it's in Italy. Yeah. So, right, especially for personal auto. So there's always a problem that then you're getting a sample selection problem. People who know they're monitored change their behavior, and so they use it. So that's a bit of a challenge when it comes to telematics, which is also why when Luminant is building its models, we build them at a state level or an aggregate level, not at the individual level, because we don't have the client data. When we model it, our assumptions are very different. We go back to an accident. Why does an accident happen? And we think there are three outcomes: a death, an injury, or a property damage only accident. What's the driving factor behind each of these three? Is that linked to the economy, or is that linked to the way roads are maintained? Is that linked to the age of the driver? So there are a few factors that you can look at data over time. We model that, we find a relationship, and then we actually project what that means. So in the beginning, I didn't willfully include telematics in the models, simply because I don't believe there is enough sample consistency and volume to make a powerful story. However, if there's a commercial auto insurer who says, here, there is data, could you integrate that into our pricing models and eventually can it get into rate filing? Absolutely, you can.
So I've been reading recently that part of the issue with commercial auto is their inability to keep up with jury awards. So talking about remaining consistent or inconsistent is social inflation. The a way that a jury will respond. And I think for the most part, they, from what I understand, juries view commercial entities harsher when there is a death or a severe injury. Can you talk about how the industry has lacked the ability to sort of keep up with social inflation?
Well, I think that social inflation is really hard to measure and pinpoint. So I must say that I feel like I've been in conversations where claims people and lawyers have been there, and they all come and tell me, you can't model that. You just can't. I think that's a self-defeatist attitude, because we won't know till we try. So I think a lot of the conversations for social inflation is, yes, there is social inflation, but we can't do anything about it. That's one part that I think is actually, it's a mental attitude, and that kind of has to change a bit. The second thing is the data. How can we actually get to social inflation? So social inflation is a key driver of loss severity. And that's one of the things that I want to do, which is basically, here's an accident, what does it cost? And I'll come to a cost estimate for an accident without any claims data, because you have certain components of a cost. And one of this is actually factoring in for persistent social inflation coming through jury awards. The reason is that there's a lot of information out in the state courts in their documents. There are companies that are mining it. They mine it and give it to the lawyers, to the attorneys. When they try to give it to the insurers kind of don't know what to do with it, because it's the people who mine it have a different mindset, and you need to be able to marry that mindset to the mindset of an insurer who wants to convert everything into a loss severity KPI. So social inflation is something that we can absolutely tackle. We will never get it correct because, jury verdicts are fickle. But yes, we can actually see trends at least a year ahead of time, such that actuaries can reserve better. You don't need to go into a tunnel without any light. That's what everyone is doing now, right? You're just saying, yes, social inflation, jury awards are going to happen, but we don't know what else we can do. Let's just go right in. And let's pray that this ends on its own.
Yeah. Well, that gets to your mindset comment, right? So the mindset that I am now seeing for carriers or MGAs that have done commercial insurance in the past, there's a lot of arm throwing. They almost want to just give it up.
Yeah.
Explain to someone, someone that might be interested in commercial auto, carrier exec, and MGA, why now is the time to actually use this sort of data and technology. Why is now the opportunity to get back into commercial auto? Or if you have commercial auto, why is now the time to really put the pedal down and actually start to take advantage of the opportunities that you're presenting?
Yes. So the first example is, or the first reasoning is, there are actually a few companies, and the industry knows who they are, who've done it kind of better, right? So it means that if those companies can do it better, not doing it better makes you lose your competitive advantage. That enough should be reason for you to think about it. The second reason is that so many people have put their hands off it that I consider it a green field. In insurance, there are no bad risks. There's only badly priced risks. And in commercial auto insurers are consistently being married to badly priced risks. So if there is a time to reassess your internal appetite, your book of business, this is the time. And the third thing is the pandemic, right? We all know the world has gone still, but we are all eating and we are buying things from Amazon.
Someone has to ship them.
Exactly. The trucking industry is driving it. And so if I were a commercial auto insurer and you wanted to know what to do, you would call me because this is the perfect time, right? To do something a bit different.
We are in the new world, right?
Yes.
We're going to be, and I've debated this with folks that, we may have a V recovery and go back to the way we used to be. I really struggle believing that. I think we are in a new normal. I think there will be an entire workforce that will be working from home. Therefore, there will be fewer cars on the road. And therefore, just by default, commercial auto losses will go down because there'll be fewer accidents, fewer deaths, fewer injuries, fewer liability claims. So that by itself seems to me would open up the opportunity.
Yes.
Layer on top of that the proper analytics on that, and you can get a fresh start.
Yes.
If you've been a commercial auto writer, or if you're new, you can start off, really gung-ho at the start and have, potentially several years of victories under your belt.
Yes.
Can you comment on that?
Yes, that was the fourth point, which I should have mentioned, which is that personal auto, the industry is expecting a decline in personal auto or move away into autonomous cars, right? This could very well start that, and not by a shift to autonomous cars, but to the work from home. And on the same side, it might actually push the demand for semi-autonomous trucks, right? And in there, insurers, do they want a slice of the pie? They need to get in with analytics. Otherwise, they'll lose it to the OEMs and to the product guys.
Yeah, because you can't use the traditional actuarial mechanisms.
Absolutely.
To price this new type of auto liability.
Yes. And so this new normal, as you say, and I completely agree, is a perfect reset point for the industry. And so I've been prospecting for commercial auto for 2 years, and I've had lots of rejections and feedback. And when the pandemic happened, apart from the incredible sadness, I was thinking, for those insurers who adopt carpe diem, this is a make or break. Yeah. The ones who say, we want to try something a bit different, will be the ones to benefit from innovation, and later the ones to survive.
I think a lot of what you're saying will come down to mindset. Yes. Because no disrespect, I think the analytics and the data have been around for a little bit of time here. And those that have spent time in technology, in the analytics, in the data know that this will work.
Yeah.
I think it comes down to the ability for the insurers or the MGAs partnering with insurers to understand that it's potentially not as risky as they think it is. It sort of harkens to, you make an investment and you take a big loss. It's scarring.
Yeah.
Right. And it's hard to come over that, but I think you're absolutely right in the ability to start fresh, start new here, and with a different approach. Yeah. So you don't have to take the risk that you used to take. And the industry itself is probably going to become less risky just by innate nature of the environment that we're in.
Yep. And we all know that the industry doesn't like to take risks.
Yes.
Right. But now it is faced with that conundrum of, do I take a risk, convert it into an opportunity, or do I just stand still? And it's, at the end of the day, the ability to move innovation, I believe that the onus is on the senior management. It's a vision. It's wanting to know where you want your business 5 years later and what you're actually going to do materially to change it. Because of course, change should be bottom up, but it should come from top down. And so again, I look for a visionary CEO or a CEO who says, yes, this is a new normal. Let's attack this and let's reap the first benefits. That would be a great partner for Luminant.
Renu, whenever someone asks me, how do you know if a company is taking their strategic data and digital initiatives seriously? And I say, you'll know when you see the senior execs rolling up their sleeves and getting in the middle of it. It's that is the big difference. You're right. I think it needs to be driven,
yes,
bottom up,
yes,
but I think it needs to be led top down.
Yes.
And if the CEO and the CUO are not fully committed, fully on board, they're not rolling up their sleeves and getting involved in the decision making and only collecting their executive summary weekly meetings or whatever, things can go awry.
Yep. I agree. And it's also rolling up their sleeves and doing it every day. As a friend once told me, if you're an entrepreneur, you wake up every day and you do the same thing again, even though you know you're going to fail, right? But you do it because you have the passion and you are an entrepreneur. This is the time for a CEO, for a CEO to be an entrepreneur. This is the perfect time, right? And there are so many companies in the InsurTech world with ideas. And so it's just a great time for an incumbent to work with an InsurTech and to figure out where we blend together. And I believe that the industry has moved away from considering InsurTechs to be, we replace them at least in certain fields. We need to really admit the fact that we will do better when we work together. There will be discomfort for sure, but insurance is a long business. So it's grit, sheer grit that leads to good innovation and good analytics.
You did bring up the pandemic. Any other thoughts on how this may affect our industry? Have you, and you're not even in the States right now, right? You're in Switzerland, right? So you've been sealed up. First, before we get into that question, how are things over on the European continent and specifically in Switzerland?
So Switzerland has been excellent. I can't use a better word for it. I'm very proud of the country that I've adopted for 7 years because we get consistent messaging from our government staff, and there is people obey orders for the most part, and we're lucky enough that our hospitals were never overrun. So it's highlighted what a perfect world Switzerland is. Europe, that there's been, Italy's been hard hit, Spain has been hard hit. But when I think of COVID-19 in Europe, I think about one word, that's solidarity, right? It's just, people are combined about how we feel in an epidemic or what it means. I'm American, so I worry about America. And every day I wake up and read the news and I see different messages and I see all kinds of thoughts. And so my first thing is that you guys need to have one message about what this means for you. Countries have different value systems. That's completely fine. But in times of these crises, we need to kind of bring it all together. So I sit here and I see the difference in how countries deal with it. And as a social scientist, I would just say I'm interested. That would be the best word. But I hope that things get better in the US quicker. And all of us are dealing with an uncertainty. We don't know anything about the virus. So we don't know reinfection rates. We don't know vaccines. It's so much of uncertainty. And so I would say just for us to understand what the new normal is, the word I will use again is solidarity, that we are actually in it together. So that's from the personal point of view. And I think also the personal going into the business, I'm in an industry that is really slow. The sales cycle is really long. And now the uncertainty is extending it, right? So you need to kind of figure out, how does Luminant add value? Where do we go first? Do we need to change any approaches? Simply because insurers are, I think 1 month later, their heads are still not wrapped around the idea, right? I think the whole of last month must be them trying to figure out, how do we get everyone to work from home? And now who comes into work? So it's basic business operations. So which is why today, when you ask me what are the insurers trying to think, I think most industries are figuring out what this is going to be. 2 months later, I think, I believe in the insurance industry that they will have a better idea of what they want to do. Never perfect, but they will have a better idea. And I would say that's the time for innovators and insurance companies to talk, because we have all kind of gone over our first panic hump. And I think that
it's likely not to be the only one.
Yes, exactly. And the other thing that I say, this is a long journey. Let's not, to any investor, to any insurtech, revise down your expectations, right? This is something which is public health versus the economy. If there's no health, it's kind of hard to have an economy. And so I think that so far, the response of the industry has not surprised me, because it's very normal. This is a new situation for all of us. What really defines the industry is the next 2 to 3 months. What do we do? And the companies that actually say, this is what we are doing, sends a strong signal to the rest of the industry that this is what they need to be doing.
That's a fantastic message. For those that want to follow along to the changes in the evolution of commercial auto and the types of things that you're doing, are there any particular blog sites or trade associations where you can get like your finger on the pulse of how commercial auto is changing, specifically in the the insurance prism?
Well, I think that Corning does reports.
Yes.
Corning does reports. Then the ATA has constant feeds.
Let me guess, American Transportation Association?
Trucking.
Okay.
Association. And then there are certain other kind of data carriers, data vendors that do some kind of work, like Freight Waves, which look at different kind of data and the movements. And my marketing lead and I are working on a piece that talks about what this can mean for the transportation industry. Novarica, which is a vendor, does good updates. So a lot of the thought leadership comes from actually the vendor side rather than the insurance side. And I think that's normal, right? Insurers are trying to figure out, okay, whom do we give money back to? How do we get a business? So that's fine. So I think also if more and more insurtechs can talk about this, write about this, it is a big advantage. And I would actually, one of the trends I've seen is that anyone who can do data analysis goes and looks at the COVID-19 data and starts projecting deaths. And I was like, there is a battalion of people doing that. Let the epidemiologists do their job. Let's see what this means for us. Whatever your industry is, think about it. Because there is collective wisdom, and you just need to kind of sit and think what this means. And I'm pretty sure most of us will be off in our projections in what we think. But I think we are also at an interesting phase where what we think actually shapes the next year. It is not really what we do, but what we think, which translates to what we do, is what is going to be the next year.
The old Henry Ford quote, if you believe you can or you believe you can't, you're right.
Yes.
Right here.
Absolutely.
Thanks for the positive message. Thank you for taking time out of your Saturday
My
to
pleasure.
talk commercial auto, and let's stay in touch. Let's have a some sort of recurring catch up so we can get our finger on the pulse of what's going on in commercial auto, if that's okay with you.
That would be fantastic. Thank you so much for the opportunity.
Thank you. And for those that are still listening, thank you for making it all the way through. Same message: stay safe, wash your hands, keep your distance, and all that good stuff. But stay safe, everyone, and be kind. Subscribe. Thank you.
Thank you.
And so, my fellow Americans, ask not what your country can do for you. Ask what you can do for your country.